Hey, welcome back. It's Jason Walter here. As I mentioned in my video the other day, it just got easier for people to buy foreclosed homes. This is because the Federal Housing Finance Agency, or the FHFA, recently announced that owner-occupants, public entities, and nonprofits will have the exclusive ability to buy Fannie Mae and Freddie Mac real estate-owned homes before they are available for investors to purchase. The time period of when these non-investors can buy these foreclosed homes before investors has been extended from 20 days to 30 days. What this basically means is that there will be no competition from investors for the first 30 days when these REOs are listed for sale. I'll discuss more about REOs, or real estate owned properties, later in this video. A ton of you asked, how can you take advantage of this news and how can you find a foreclosed home to buy? So due to popular demand, the topic of today's video is how do you buy a foreclosed house? I'll also discuss the pros and cons about buying foreclosed properties. A lot of research went into making this video, so if you wouldn't mind, please hit the like button. I greatly appreciate that because it helps the growth of my YouTube channel. Thank you so much for doing that, and let's go ahead and dive into today's video. First of all, let me briefly explain what a foreclosed home is. A foreclosed home is owned by a bank or a lender. Lenders can foreclose on a home when a homeowner stops making their monthly mortgage payment. This means the lender or bank takes ownership of that home and then tries to sell it to recoup their losses. A foreclosure can also happen eventually when the homeowner stops paying their HOA dues or their property taxes. Okay, let's talk about the three main ways about how you can buy a foreclosure. So number one is buying a pre-foreclosure in the form of a short sale. A short sale is when a homeowner still owns their house, but they owe more on their mortgage loan than what their home is worth. In a short sale, the homeowner is often behind on their mortgage payments, typically 90 days or more past due, and they apply with their lender to sell their house as a short sale due to a financial hardship. So let me briefly give you an example. Let's say your house is worth $150,000, but you owe $200,000 on your mortgage loan. So what you're basically doing is asking your bank or your lender, would they accept a $50,000 plus loss in order to avoid a costly and lengthy foreclosure process? Obviously, a major disadvantage for a homeowner if they want to do a short sale or if they get foreclosed on is the big negative impact it has on their credit report. According to Experian, a foreclosure or short sale can remain on your credit report for 7 years from the date you first missed your mortgage payment that led to that event. This would be treated as a major red flag on your credit report that would likely affect your ability to get approved for loans for years. Missing 3 to 4 mortgage payments could easily reduce your credit score by more than 100 points. This can be magnified if you have late payments for other accounts, such as a car loan. If you're a home buyer looking to buy a short sale, then these are often sold by real estate agents and they're often listed on the multiple listing service. So if you're on Zillow, Redfin, Realtor.com, you would see these houses for sale as short sales. Like a traditional home sale, you can have a real estate agent represent you, which is what I would highly recommend, of course. So if you want a real estate agent referral for your neck of the woods, then go to homeandmoney.com/Jason. In today's video, I'm not going to be going over in detail regarding short sales and pre-foreclosures, but if you want me to make a separate video regarding that, then please comment below. I'm always up for video topic suggestions, and I'll definitely make a video as long as there's enough interest in that topic. Regarding pre-foreclosures, here's something you should definitely be aware of though. So when you go onto Zillow, you can actually search for pre-foreclosures, and these are normally houses that are not listed for sale. It just means the homeowner is late on their mortgage payment and a notice of default has been issued with the county. Again, pre-foreclosures on Zillow are actually not for sale. A second and more traditional way of buying a foreclosure is through a foreclosure auction. At these auctions, foreclosed houses are often sold to all cash buyers. That's one major disadvantage of these because they often do not allow you to get financing in order to buy these houses. So unless you have briefcases full of cash, this option is probably not going to be your best one. There are also plenty of other risks associated with buying a foreclosure at auction, so let's discuss. A home you buy at auction may have a lien on it, and you may not find out about that until after you have purchased the house. So for example, if the previous owner stopped paying their property taxes, then the county may have placed a lien on that property. And guess who probably has to pay that off? The new homeowner. Foreclosed houses often have extensive amount of repairs that need to be done. I can't tell you how many foreclosed properties I've been in where there's holes in the walls, cracked tiles, the cabinets are destroyed, the toilets are destroyed, and so on. Yet another downside about buying a foreclosed property at auction is that you probably will not have the chance to order an appraisal on the home or have an appraisal contingency in hand. Without an appraisal, you run the risk of paying too much for the house. And perhaps the biggest risk about buying these homes at auction is that often you do not have the ability to walk inside the house prior to buying the house. That's right, imagine paying $300,000 in cash to buy a house that you have never seen the inside. Therefore, you have no idea how much repairs are needed. Therefore, if you're still interested in buying a foreclosed property at auction, use extreme caution. A third and somewhat less risky way of buying a foreclosure is buying an REO or a real estate owned property. This is when a foreclosed home failed to sell at an auction. Banks attempt to sell REOs using a real estate agent who then lists the house for sale online. These REOs are still foreclosures, so they often need a lot of repairs and they're often sold as is, meaning the seller is not going to be doing any repairs. So here are the major pros and cons about buying an REO. One major pro about buying an REO versus a foreclosure is you often have the ability to get your own inspections done. Typically, if you find major issues with a house or property, then you can back out about buying the house. However, one major con about buying these is that you often do not have the ability to ask for any repairs or a credit in lieu of repairs. This is because these houses are sold as is. This is obviously drastically different than buying a house that's not a foreclosure or not an REO, because in a typical real estate transaction, you often have the ability to do all your inspections and then ask the seller for any repairs. And based on my almost 9-year experience of being a real estate agent, I would find that most sellers are willing to do some repairs or give a partial credit in lieu of repairs. If you decide you want to buy a foreclosure or an REO, or any house for that matter, I highly recommend you link up with a great real estate agent in your neck of the woods. That obviously would be your first step. And the second step is to get pre-approved for a loan. If you don't have a loan officer you can go to, I highly recommend you ask your real estate agent for a referral. This is because real estate agents often have a preferred loan officer, and that's someone they know, like, and trust. So for example, the loan officer I work with in the greater Sacramento area, I've been working with him for years and he's helped a ton of my clients and they all have had positive experiences. And once you get pre-approved with your lender, it's time to start searching for houses. And here's a quick tip for you guys. If you're looking to buy a foreclosure, then I highly recommend you include non-foreclosures as well. This is because at the time of this video, there's a severe lack of houses for sale that are foreclosures. This, of course, is because of the federal foreclosure moratorium that was in place for over a year, but recently expired on July 31st of 2021. I mention this because the foreclosure process can take months to years, so don't expect a significant influx of foreclosures anytime soon. So check out the link below if you want a real estate agent referral for your neck of the woods. Check out that link below. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing as well. Hope you have an awesome weekend, and I look forward to seeing you on the next video.